Hey everybody, welcome to this channel. Today we want to talk about how to avoid emotional investing. Make sure to watch until the end, because it's one of the most amazing hacks you have ever seen. Please subscribe and turn on notifications so you don't miss more videos and much more. Why investment not for the emotional? Comprehend your danger resistance and the dangers of your speculations can be a significant reason for objective choices. Your monetary teacher dynamic observing of a portfolio is significant for exploring the changing tides of monetary business sectors. In any case, it is additionally fundamental for individual financial backers to deal with the social driving forces of enthusiastic trading that can emerge out of following the market's promising and less promising times. To be sure, financial backers appear to have a skill for packing into speculations at market tops and selling at the bottoms. Since it isn't remarkable to get trapped in media promotion or dread purchasing ventures at pinnacles and selling during then valleys of a cycle. How might financial backers explore unstable business sectors, while likewise keeping balanced and keeping a portfolio enhanced for the best by and large returns through a wide range of market conditions? The key is to comprehend the inspirations driving passionate contributing, and to stay away from both euphoric and burdensome venture traps that can prompt helpless. Dynamic financial backer conduct has been the focal point of many investigations and various speculations endeavor to clarify the lament or eruption that purchasers and dealers frequently experience with regards to cash. The financial backer's mind can overwhelm reasonable thinking during seasons of pressure, whether that pressure is an aftereffect of elation or frenzy. Adopting a judicious and practical strategy to contributing, during seemingly a brief period for benefiting from rapture or unfortunate market advancements, is fundamental. In this video, there will be 5 vital important points. 1. Investing dependent on feeling, avarice or dread, is the principal motivation behind why such countless individuals are purchasing at market tops and selling at market bottoms. 2. Misjudging chances related with speculations is one justification for why financial backers here and there settle on imperfect choices dependent on feeling. 3. During times of market instability and increasing loan fees, financial backers regularly move assets for more dangerous stocks and to bring down hazard. Loan cost protections for dollar cost averaging and enhancement are 2 methodologies that financial backers can execute to settle on steady choices that are not driven by the feeling. 5. Sticking with it through transient instability is regularly the way to longer-term accomplishment. As a financial backer, the non-proficient financial backer is normally placing hard-made money in ventures for getting a return. Still, they see their speculations lose steam because of market improvements. Now and again, the misfortunes can cause pressure and rethinking. That is, numerous financial backers have a moderately okay resilience with regards to putting away because losing cash is excruciating. However, the danger can be seen as a guidepost for contributing and financial backer conduct. Financial backers who go into speculations with a base-level comprehension of the dangers implied can relieve a lot of the feeling related to putting resources into different words. Difficulties because of passionate contributing can manifest when financial backers see unidentified or higher stake chances than they had initially discovered. Positively trending markets are periods when markets climb constantly, and now and again aimlessly. At the point when the bull furies and financial backer feeling becomes one of the overall extravagance, financial backers may see market openings or find out with regards to speculations from others, like reports, companions, associates, or family, that might force them to test new waters. The energy may lead the financial backer to attempt to acquire gains from ventures that are arising because of bullish economic situations. Moreover, when financial backers read anecdotes about an awful economy or hear reports about an unstable or negative market period, dread for their speculations can fuel selling. Bear markets are continually sneaking around the bend and accompanied a significant number of their admonitions. That can be significant for financial backers to follow and comprehend, as opposed to a buyer market now and then. Monetary business sectors can drift lower for a long time or even a long time. Periodically, bear markets develop from a climate of increasing financing costs that can spike hazard off exchanging and a change for more hazardous speculations like stocks to generally safe reserve funds. Items. Bear markets can be hard to explore. When financial backers see their valued possessions lose esteem while places of refuge become more tempting because of their rising returns during these occasions, it tends to be difficult to pick between purchasing values at market lows or getting tied up with money and premium-bearing items. Enthusiastic putting is frequently an activity in awful market timing. Following the media can be a decent method for identifying when bull or bear markets are advancing because the everyday securities exchange reports feed off the movement happening during that time, which can now and again make a buzz for financial backers. Anyway, media reports can likewise be obsolete, brief, or even nonsensical, and because of bits of hearsay. By the day's end, individual financial backers are responsible for their own exchange choices, and thusly should be wary whenever looking to time market openings, dependent on the most recent features. Utilizing normal and reasonable thinking to get when a venture might be in an improvement cycle is the way to assess fascinating freedoms and opposing awful contributing thoughts. Responding to the most recent breaking news is presumably a sign that choices are being driven by feeling rather than normal reasoning. The idea that many market members purchase at the top and sell at the base has been demonstrated by recorded cash stream investigation. Checks out the net progression of assets for common assets and regularly shows that when markets are hitting pinnacles or valleys, trading are at their most elevated market abnormalities. Like an emergency can be helpful periods for perception. During the monetary emergency of 2007 to 2008, financial backers pulled out cash from the market and cash streams to common supports turned negative. The net asset surges topped at the market base, and as is ordinary for market bottoms, the selling made excessively limited ventures, which ultimately shaped the reason for a defining moment and the market's next climb up. Methodologies to take the emotion out of contributing. Two of the most famous ways to deal with contributing, dollar cost averaging and enhancement, can remove a portion of the mystery from venture choices and diminish the danger of helpless planning because of passionate contributing. One of the best is the dollar cost averaging of speculation dollars. Dollar cost averaging is a methodology where equivalent measures of dollars are contributed at a normal, foreordained span. This procedure can be carried out in any economic situation in a descending moving business sector. Financial backers are buying shares at lower and lower costs. During a vertical pattern, the offers recently held in the portfolio are creating capital additions, and since the dollar venture is a proper sum, fewer offers are bought when the offer cost is a higher expansion, which is the method involved with purchasing a variety of speculations rather than only a couple of protections, can likewise assist with decreasing the enthusiastic reaction to advertise unpredictability. All things considered, there are just a modest bunch of times in history when all business sectors have moved as one and broadening gave little security. In ordinary market cycles, utilizing a broadening system give a component of assurance, since misfortunes in certain speculations are balanced by gains in others. Expanding a portfolio can take many structures, like putting resources into various businesses, various topographies, various kinds of ventures, and in any event, supporting with elective speculations like land and private value. Particular economic situations favor every one of these venture gatherings. So a portfolio comprised of this multitude of different sorts of ventures ought to ensure the scope of economic situations. The main concern of speculation contributing without feeling is quite difficult. However, a few significant contemplations can hold a singular financial backer back from pursuing useless additions or overselling in alarm. Understanding your danger resistance and the dangers of your speculations can be a significant reason for normal choices. Dynamic comprehension of the business sectors and what powers are driving bullish and negative patterns is essential too, by and large. While there are times when dynamic and passionate contributing can be beneficial, information shows that after an obvious speculation procedure and keeping with it through market unpredictability frequently brings about the best long-haul execution returns. Assuming you observed this video helps, ensure you remark beneath and hit the like button. Assuming this is whenever you first are watching my video, ensure you hit the buy-in button. So hit the buy-in button and feel free to watch different recordings at present. Thank you for watching this video. Please subscribe and like our video to support us. And turn on notifications so you don't miss more videos. See you at the next video.